Good day, everyone. Well, we see a market that has been in a downtrend, a mild downtrend. Although that said, they're all trading under critical moving averages, and we've also had a slew of distribution days in the price volume action. So under normal market conditions, non-QE markets, that is to say, where the S&P tends to correct more than 6% over the last 2 years, we would be on a sell signal, of course. But these are not your father's types of markets, unfortunately. So a lot of the tried and true indicators are not so reliable. And we've seen many times since January of 2013 when all hell looks like it's about to break loose on the major averages, when they're down, say, when the S&P is down 4, 5, or 6%, and then they find their floor and start tiptoeing higher, with the QE pushing the averages higher. So we have to be careful here not to bottom tick the market on a sell signal by the model, just like we don't want to top tick the market on a buy signal. As you can see on the S&P, the S&P has a tendency, if you go back the last 2 years, when it hits new highs, it might not hit new highs on ample volume, yet nevertheless it'll start tiptoeing higher and higher and higher. And so if you're sitting in a sell signal or you're sitting in cash, then you might miss that small uptrend. I mean, we haven't had any fiercely powerful uptrends in this QE environment, but nevertheless you do get left behind, or you can get left behind. And the risk there is, of course, what happened the other day in July when the model went back to its buy signal on the basis that the S&P hit new highs, closed at new highs, and then went sideways, and now it's been heading lower since then. So it's a tricky market environment because of these manipulations done by central banks around the world. And right now the model sits in cash simply because it doesn't want to get bottom ticked, and B, it certainly doesn't look like buy signal time because leading stocks have taken on the chin. There are a few leading stocks that look like they're bucking the trend just fine, but still the winds, the selling pressure is clearly evident in quite a few leaders, and in enough leading stocks to make things fairly bearish for markets right now, plus all the distribution days and the downtrend in the S&P 500, the Russell 2000, which is a risk, the higher risk index, is under its 200-day moving average. And so right now, keeping our powder dry in terms of timing the market is the best way to go. In the meantime, we're going to continue to watch for viable gap-ups and pocket pivots. Some of these have worked very well. Actually, a number of these have worked very well over the last many weeks. Of course, be your guide, especially in these webinars, toward any short sale setups, which can be quite ample, especially should this downtrend persist. Gil?
Yeah, some of these viable gap-ups, I think, like this one, be somewhat discriminating in terms of where you jump on them. This one's near the lows of the day, so it's probably lower risk here. But coming straight up off the bottom, this thing's making a big cup. Looks good though, but they're selling into it this morning. I think from my perspective, where I've been making most of my money lately has been on the short side, and a number of leading stocks have started to break down. Like Trip is on a, you look at this on a weekly chart. We're going to put these together on weeklies and dailies so we can kind of run through these. These are my short sale targets. Trip here on a cup with handle breakout attempt. Actually doesn't even try to break out unless you consider this here the breakout when it's coming up to 110, but it fails right there. And this is pretty standard issue behavior where you initially fail on the breakout and then you bust through the 50-day and you run down to some level. Notice how it's on top of this area here and down to the 200-day moving average, which is actually right at the 40-week moving average. So that's a breakdown there. Here's Illumina. Same sort of situation, almost exactly, really. Has broken down. It's getting some support at the top of this area here. You can see these highs, these peaks in here are providing some support. So the rally today is logical. So I'm actually working this one into the rally, putting out little bits of it right up in here into the 65-day exponential today. We'll see if that works. It doesn't necessarily have to. And some of these stocks you have to come after repeatedly to to actually end up making some decent money when they break down pretty sharply. So give me 1 second here. I'm not sure. Does anybody use this Schwab Street Smart platform? I've been using it for a while now, for maybe the last month or so. I just got it, and it seems to freeze up. I don't know what the deal is with that, but I need to log back on. Okay, there we go. Let's see. Where are we? Some questions. I'll get to those in a bit. But other stocks, keep an eye on, I think, on the short side. Amazon remains shortable. It's in this short bear flag. You got resistance around 320 and change along the lows of this sort of handle-ish, or more like a flag type of formation in here. And runs up into the 10. There's not much volume in it today. Every day I come in and short it up at the highs, and it comes in a buck and cover, and it goes nowhere. Netflix tried to pocket pivot out. It's coming in today. Reed Hastings, I guess the CEO, is on Facebook pumping the stock shamelessly. I don't know. I think he's a big BS artist, frankly. But Netflix is still a great company. But you got a pocket pivot here. It's pulling in. Is this thing going to work? We'll see. Other shorts I've been campaigning are Yelp. Rallies up into the 10-day, 20-day yesterday. You can hit it in there, and it comes in. You're coming in for the last couple of days. And moving lower, it looks like it's in a reverse bear flag. My neighbor is redoing his kitchen, and there are a bunch of things going on in their backyard, so hopefully you don't hear all the saws and everything going off. Anyways, let's see. Let's continue through here. Michael Kors is on the gap down. That's a little bit overdone. Now you're watching the rally. I think it becomes shortable up in here, up in the 80 level or above. Workday is another one I've been watching. You're in a bear flag here. Earnings come out at the end of the month, so it's below the 200-day, so it might be shortable using the 200-day as your stop. Splunk is another one. Been working that one short. It's coming off. You can see it rallies up, so you want to watch for these sort of upside shakeouts, and then sometimes you can come in and hit them if they start to reverse and they break down pretty quick. So Splunk is getting hacked. You also have Data is another one I got short on this day after earnings, and it's come down an area of support. I'm looking for a rally back up towards the 50-day, which right now is somewhere around 60, close to 64. LinkedIn, that one is kind of interesting. Sort of a pocket pivot gap up above the 200-day moving average, still going, but I think if you look at the pattern here, it's coming up into an area of overhead resistance, and there's a fair bit of congestion here, so it's not really clear to me that this is necessarily going to launch out of here. It may come back and test the 200-day again, but I'm watching this as a potential short. I'll come in and put a little bit out every day, but it doesn't really seem to want to give way, so come in, short a little bit, cover it, come back the next day and see if it breaks. But I'm not sure if this is necessarily going to be like Netflix, because if you look at Netflix when it had this pocket pivot back here, and I think that was on earnings, it was the 50-day was above the 200-day, and that came off of both moving averages. Whereas if you look at LinkedIn, the 50-day is well below the 200-day, and it's not as in a similarly, say, powerful position. If you look at Netflix, this was coming off the lows of a rounding out a base here, and there was not that much overhead as it was coming up until you got up into like the 440 level up here. And LinkedIn, on the other hand, it's still got a lot of it. Not getting that many alerts going off on shorting into rallies, but I'm watching this very closely. So if some stuff does start to go off, I may have to spend a little time putting some orders in. Let's see. Somebody says, yes, use Street Smart Edge. Had a few freeze-ups in the past 18 months. Dr. K, QE was at 85 billion and now at 25 billion. It's now at 1/4 of its propulsion power. What are your thoughts?
Good question. The Fed plans to phase out, drop that 25 billion down to 15. They reduce it by 10 billion every month, and what's important here is that they continue to say, take the dovish stance that interest rates will be kept at unusually low levels for a prolonged period of time. The market's betting on somewhere in the mid-2015 where they actually start to raise rates. Pronounced pundits, well, I hate that word, but people with some good track records out there, of which we are hopefully not, people like Bill Gross with an exemplary track record, and there's a couple other guys out there who are quite smart about the bonds and interest rates based on their track records as well. He's betting on 2016 or beyond. He does believe that this issue with jump-starting the economy by printing money is not going to go away. The Fed is probably painting itself into a tighter corner the more money that they print. And this goes for all the central banks around the world to these debtor nations, Europe, UK, Japan, US, that are trying to get things going again, but this is an unprecedented time we're facing, and ultimately, if you keep printing money, history shows that you potentially run the risk of letting inflation get out of hand, and that means plummeting currency prices, where dollar, pound, and euro all race to zero. It also means that prices of commodities and stocks will start to jump higher. In the 70s, we saw that, where gold and silver, the precious metals, skyrocketed out of control because inflation it got away. And the Carter administration was just awful at containing it. This current Fed seems quite dovish, so they're not. The problem is they're between a rock and a hard place, because on the one hand, if you start to see inflation, signs of inflation, but no economic recovery, their hands are tied. They have to raise rates, but that then derails this very, very fragile recovery, if you can even call it a recovery. On the other hand, if we don't see the signs of inflation, they continue to print money, keeping interest rates low, but at some point something's got to give, and they're very careful. They're very dovish because they don't want to derail the recovery. So let's take one scenario where the inflation rates start to move higher, yet they're very loath to start raising rates because the economy is still very poor. Well, they might wait too long. The Fed has a very bad track record of having waited too long to raise rates or to lower them. And so if history plays out again and the Fed is late to hiking rates, inflation could get out of hand, and we could have another 1970s stagflation on our hands, or worse. Just the way things are now are worse than what we've seen in the 70s. So I don't think the Fed really knows what it's doing at the end of the day. A lot of these central banks just don't. It's like they're lemmings. They're all following each other over the cliff.
Yeah, good points there, Dr. K. And they don't really. Remember, they're just a bunch of bureaucrats, and anybody out there who's got a bachelor's degree and a master's degree, they don't know any more than you do. And I only have a bachelor's degree. My advisor at Stanford persuaded me to blow off getting a business degree and instead go start a business, which I did. But sometimes I feel like they don't even know any more than I do, and I certainly don't feel like I understand what they're doing in terms of just printing money endlessly and pumping away because they don't know how to do anything else. Kind of like Obama, who doesn't seem to know how to do anything else but campaign and fundraise. They're kind of stuck in this little hamster wheel where all they know how to do is print money, and they're stuck. Like you said, Dr. K, they're stuck. Green Mountain Coffee, I shorted that one yesterday. I'm still short it. I tweeted about it. It rallied. They came out with earnings. This thing looks like another kind of weird-looking, call it a weird double bottom, where you're only 2 weeks down on the left side, or a cup with a handle, but it's trying to break out, and it failed. So I went short stock yesterday on the rally, and it's breaking down today and moving lower. That's a short sale setup. That is a late stage failed base. Here's Twitter, which both Dr. K and I nix the viable gap up here, which wasn't in our view, and the stock has come in and basically failed. It's right on top of this peak here and the 10-day moving average. I'm actually short this thing, and I have been working this short since the gap up day, and it's holding right around the 10-day line. Looks like it might just continue to go lower. And there's no, market's up what? Dow's up 66, Nasdaq's up 12. To me, these are all just sucker rallies. The way I look at this, you're in a bear flag right now. Unless you get back, you got to get back above the 50-day to get me convinced that we're not going lower. So for now, based on what the stocks are doing, I'm going to play it that way. Let's see. Notice, I thought this was interesting and a little bit instructive here, but you see this move? If you look at this move from here to here, it's a little bit wedgy. Volume is light and wedgy, and I've been working this thing on the short side into these rallies, and now finally breaks down to the 20-day. But here you have a viable gap up, stock going nowhere, so this thing really should go somewhere. And if you go back and look at this one, Greenbrier, which was looking good for a while on the viable gap up, it went up the first day and then followed through the next day, but really hasn't gone much higher than that, and it finally broke down. But so these things are kind of slow, and I think in this market, if they don't get going fast, they're not going anywhere. So be cautious about some of these viable gap ups. Yesterday, what was that one someone was asking us about? WWA,
something like that?
Yeah. So here's a viable gap up, and but I wouldn't even call this a viable gap up because it's not really breaking out. It's coming straight up off the bottom of the pattern. Now, wham, they're slamming it back in. So I think, again, a little knowledge is always a dangerous thing in the stock market, in my view. And here, somebody read our book and saw a viable gap up, and so they jump all over it. If they bought it earlier in the day, they were doing pretty well, but I probably would have sold into that move myself. But, that's just me.
Also, if you look at the weekly on this stock, you can see that it's a pretty soft, soggy pattern that tends to violate its 50-day routinely. So knowing that the odds of a pocket pivot or a viable gap up working are that much less because it is a mushy pattern, which means any gains are liable to be retraced as it tries to sludge itself higher.
Yeah. Somebody asks, SWKS, considering the recent market downtrend, can the going nowhere trend of SWKS be acceptable? Acceptable for what? For somebody who wants to sit there and not make any money, or for somebody who wants to put a feather in their cap because they've determined they're going to take a long-term position on this and hold into it? I have no idea. All I know is I'm not really interested in being long anything in this market right now. And a lot of these stocks, to me, look shaky. I mean, was Greenbrier going nowhere while the market started correcting acceptable? What other ones were doing that? How about this one, Cavium? What a piece of garbage this thing has been. It ran up. It's coming over. Is this acceptable? I don't know. But it's going nowhere. Palo Alto Networks acting a little better, but there's a viable gap up. If you bought it down here off the 50-day line, you're doing okay, but earnings are coming up soon. So to me, a little questionable. I like the company, but I think in an environment where you might start to see interest rates rise, you may have a situation where high PE stocks are going to be tossed. And I think that was what we saw in May, or not May, rather March, where they started tossing a lot of these, Yelp and high PE. Yelp got blown out there. Data was another one. They got blown out off the peak. FireEye got blown off the peak. Workday got blown out off the peak. Splunk got blown out off the peak. Even got Twitter, still with the, I don't know, 1,000 times forward estimates, has been blown out off the peak, and on this viable gap up, it's getting blown out. So I think what you have to look at, I wouldn't be a hero and think I need to sit with stocks. I don't really see the logic in it. It seems kind of lame to me, but, Do you want to bless SWKS, Dr. K, and tell them that it's acceptable?
If I had those kind of priestly powers, I probably wouldn't be in the stock market.
Let's see. Priestly powers. NVIDIA, what about it? Oh, yeah, that's a viable gap up, coming straight up off the lows. So, no, I'm not going to touch that. So probably up on earnings today, big deal.
And again, if you look at the weekly on that one, it's it's a very sloppy kind of pattern.
Yeah.
And the earnings are erratic. Yeah, it's full of holes.
So we're not going to buy it, or nor are we going to tell anybody to buy it. Expedia. Somebody says, thank you, ChatMod. I don't know where ChatMod is. Actually, ChatMod is my mother, you dorks. And she thinks most of you guys are dorks, so I just thought I'd let you know that on the chat room. I think Dr. K thinks you're all dorks, too. Don't you, Dr. K?
Well, I'm the biggest dork there is. So
There you go. But I love the way people in the chat room, they love to speculate about things, you know. I never seen so many people talking out their rear end in one place, so I don't know. Whatever, as long as you guys are all having fun. It's a good chuckle when I read through the chat room logs every day and how everybody thinks they know this and they think they know that, you know. Oh, God. SKX. Let's see. Well, it's holding the Bible gap up, just hanging out, so I don't know. You know, if you want to use your 10-day moving average as a quick stop, so you at least make sure you take a profit if it starts to yank down with the market, you know. So other than that, it's acting okay. EXPE was one. Started to bring it up. Pulling back. You know, you got a breakout here. It's pulling back to the 10-day. Volume is dry, and I don't really know what that means. You know, am I going to buy it up here? I don't know. Like I said, I'm not really going to buy anything in this market. I don't really see it yet. I don't see that it's a safe environment to be loading into stocks on the long side. And I think if you haven't figured that out already, you probably shouldn't be investing. Not that there isn't a good trade here and there. Tesla, great trade on the pocket pivot here, and it ran up, it broke out. Of course, what do we know about breakouts? Here's your cup with handle breakout. It's holding along the left side peak here. But the one thing we know about breakouts in this market is that they tend to fail. So am I going to jump on it here? No. If you jumped on it here, and I've traded this on the way up, you know, it's good for a few bucks every day, it seems like, when it gets moving. But I'm not going to sit with this thing, and I'll sell into sharp moves to the upside. Is this a new breakout? That means it's going to, what was the new price target? What, 316 somebody put on it? If you think so, then, you know, go ahead and buy it. Any other questions? Let's see. What else are we looking at here? CMG is. I wonder if this thing is starting to fail. It's starting to come in. Holding the Bible gap up, but it's slow, you know, and it's coming out of a later stage base. So again, if you think about this, it's really a $64, $65 stock here, and it's moved up to $66.70. So not a lot of upside movement. And then this move is like from 60 to 65. So keep that in perspective when you want to get a big woody about some of these names, get all excited about the point moves. You really have to pay attention to the percentage moves. So, you know, Netflix looks really hot yesterday, up 19 points. It's about a little over 4.5%, so it's not like it's a huge move. Do you see any sectors setting up for an early entry for a bounce? What did I just say? I'm not really interested in buying into anything right now, and I don't see any sectors setting up for a bounce until they actually start bouncing. So I don't really know what you're talking about. I don't monitor stocks to see if I want to, if they're going to bounce, and I might come in and buy them unless there's something concrete there in terms of a pullback to a moving average that the stock has shown a tendency to hold, or a pocket pivot coming up off the right side. So RH, holding BGU and maybe starting to roundabout with low volume and 50-day support. Let's take a look. Not really. I don't know. It doesn't look that way to me. The volume's kind of weak. It's trying to round out. It's trying to hold the 50-day, but it could violate it. You know, everything's up today. They got the market up. They're probably just sucking everybody in on the long side here. But, you know, am I going to start buying it? I don't know. Just show me a pocket pivot, maybe I might get interested. But it is holding. But on the other hand, it had this Bible gap up, had a beautiful move. I mean, if you bought it on the Bible gap up right around 80 bucks, it runs up to a high of 94.50. So what do you get? You get like almost a 20% move there in a couple of weeks. And in this market, I think you need to take them. But I don't really see anything that makes me want to get, you know, all salivating on the long side here. I really don't. My general view here is, and it's kind of been that way since I got back from vacation a couple of weeks ago. I've done very well so far this year, and I see no reason to start mucking things up by trying to become a hero. I'm just kind of watching this thing on the short side, hitting them on the short side where they're vulnerable. If I see a long trade, like G-Pro was a nice long trade before earnings, and a nice move from here off the 10-day moving average, runs up for 4 days. If you didn't sell into that move into earnings and you thought you were going to hold it and it's going to have a big gap up, well, surprise, making lower lows, but it was there. RFMD, was a buy right off of, you had pocket pivot in here, you had a buyable gap up here. From there, you could have bought it the next day. It ran up 10% in 2 days. Instant profit. No reason why you can't take that. Somebody else saying, I know it may be too early to consider, but any stocks that pique your interest for when the market does turn? How do you know it's going to turn? How do you know it's going to blow to pieces? I'm just watching things in real time. I don't sit there and look at things in terms of piquing my interest. It's pretty much objective. It remains fully in the present. That's my strategy generally, is to just stay in the present and watch what things are doing. Test positions. If they don't work the way I expect them to, I bail out. And that's pretty much it.
And you'll start to see more and more stocks, quality stocks, hit your screens when the market really is starting to turn. So you don't even have to question. You don't have to think, as Ed Seykota says, the future doesn't exist. And when you think about the future, it's just going to throw you off of being in the real time, being in the present.
And I think it's kind of, but people want to believe that, Dr. K, that we're these gurus, that we can see the future. And no, what my strength is in operating totally in the present. And as I've progressed through now 25 years of being a trader, getting outside of all this need to think I need to predict and have certainty about the market. I'm fully comfortable with the uncertainty the market presents, and I let it tell me what it wants to tell me in real time. And what that generally means, I'm watching ILMN right now, 166.08. Let's take a look at this real quick. But you see it when it turns, and back when the market turned in May of last year, or not last year, what am I talking about? May of this year, I'm getting distracted here because I'm watching this thing. We're rallying up right up into resistance here. So I'm watching my handy-dandy 620 chart. You see Twitter looks like a piece of garbage here. Let's look at Illumina. It's just pushing, pushing, pushing. But notice the MACD is kind of weak in here, not really pumping here. You got a MACD stretch right off the bat, but wasn't anything to go after. And this will be interesting to see how this pans out. But there's a buy recommendation on it, and generally that's what causes these rallies, but they almost always become shortable. In most cases, I'm going to say. There are some exceptions. Like for example, I'm not sure. You had what was a buy recommendation? Tesla. That's not necessarily a shortable maneuver here. It's acting okay. So I would say, if anything, if the market turned, this may be a stock to go to. But you're looking for things that are turning. So even going back to Illumina, when the market was turning in May, you had pocket pivot here that you could have bought into, and it turned. You had a number of roundabout pocket pivots that were popping up at the time that the market turned. So the key is in knowing in advance what you like. What is everybody shorting Illumina now at 166? I know all of a sudden it's like starting to come in a little bit, but they're whacking it. But I think these things become shortable. 170 would be very juicy, but it may not get there. So I watch my handy-dandy 620 chart and see what happens here. But there's nothing right now that really gets me excited unless I see some sort of concrete buy point show up. So let's see. Here's a question for you. Dr. K, are there any good websites to learn about Bitcoin?
Google Bitcoin, Google cryptocurrencies. You're going to pull up more than you ever dreamed of. And of course, the most traffic sites are going to come first. So you don't, let Google do the work for you, and you'll be able to find loads. I mean, infinite amount of information, really.
Yeah, I mean, when it comes to basic questions like that, don't be so lazy. Get on the internet and do some searching and nose around for yourself. It's like, yes, Dr. K has one particular website that is so awesome about Bitcoin. You must go. There's so much garbage on Bitcoin. Go in and check it out for yourself.
You could go to Reddit. That's one of my favorite sites for where there's a high-level discussion going on any kind of topic that is controversial or very cutting edge. So definitely start to explore Reddit. Actually, I think that goes
Yeah.
for everyone who's listening. Just it doesn't have to be Bitcoin or stocks. Could be any topic of the day.
Somebody was pointing out or mentioning earlier they have no sound. Usually when you have no sound, it's your own system. And I would usually tell someone get some real internet service instead of that cheap stuff you got right now for $14.99 a month. Let's see. I actually have a Time Warner Business Class, which comes in blazing speeds generally. So I don't really think anything is going to be my problem. Here goes GMCR breaking down still. Let's take a look at some of these 620s. I know some people ask about 620 on the chat room. I only prefer to discuss it in the on the webinars because I can actually demonstrate it. Because it really is just a guide for me. It's not some magic thing, because everybody wants your entry point. Where is your entry point? Is it 115.68235 or is it 115.58924? It's like if you got to be that anal about it, I think you should just give it up. Take up golf. Let's see. Somebody says to read the Bitcoin white paper. And then, of course, that brings up the question, well, where do I find it? Well, you could always search on Bitcoin white paper on Google. But that's too complicated for most people.
Google is such a shortcut to so many things, but it's yeah. I mean, people just make a habit of it. Whatever they're wondering about, just Google the right terms.
Somebody
and
asks,
you'll find your answer pretty quickly.
You'd be, as my son Alex likes to say, the internet is, what did he say? The internet is our master. So something like that, or at least something pointing
Or
to
oxygen.
It's something like that. I don't know. In other words, it is, especially for his generation, which I call the digitals. You got the millennials, but kids who are teenagers now have never known anything but high-speed internet, and so I call them the digitals. That's my term. You guys can all go ahead and spread that around for me. Somebody asks, do you use HGS Investor software to find short sale candidates or just review the former leaders? Well, I'll say this till I'm blue in the face. I just, your buy list in an uptrending market becomes your short list once these stocks start to break down. So I don't need to screen to find them. I do use HGS Investor software using my secret weapon chart to monitor names based on the indicators that I use and get a sense of whether they're actually under real accumulation or whether it's just kind of a phony move. I like that. Force indexes are very helpful. To me, the force index is just a more sophisticated version of accumulation distribution. It seems like. You can correct me if I'm wrong, but all I know is the color. I look at the colors as they change, and I can get a sense of what's going on, and I've messed around with these enough to know what I'm looking for. So there goes Green Mountain down to 114. Die. Okay, let's see. What else we got here? P&G announced a new product launch in adult diapers. Time for a poo-poo pivot. What's the symbol for P&G? Just PG? Procter & Gamble? Adult diapers. I love it. I actually had to wear, after my surgery last year, I had to wear these little guards for about a month or two to prevent against any leakage that might occur. That was exciting. I don't know about wearing diapers, so that would not be fun. But I probably shouldn't laugh. You never know when that's going to happen, right, Dr. But, yeah, I noticed you go on TV and you see all these ads for these liners, like the ones like I was using after I had my surgery last year. Here comes LinkedIn starting to roll over. And diapers and all this stuff, catheters. I mean, my son noted that they're not even marketing to his generation at all, are they? And I said, yeah, that's pretty much true. But the only thing I might have on TV would be either Fox Business News. I'll watch CNBC sometimes just for entertainment value in the afternoon as I'm going through my screens. Let's see. Amazon at 20. What does that mean? Amazon's, I think you just, if it rallies, 316 is the high. If it rallies at like 314, 315, 316, just short it, and it's probably going to go lower. From there, at some point. I don't know. I'm not sure why they keep buying it, but they do. So, but to me, this is just a bear flag. It's heading lower. It's heading for this low, I think, eventually. So I just keep holding. I'll come in short, whopping 500 shares every day. And then reshort, add to it if it bounces. Let's see. On using the 620 for short-term trading, do you wait for the actual cross, or you sometimes anticipate the crossing? Well, it kind of just gets you in the ballpark. So let's see if I can use an example. Let's see what LinkedIn is doing right now. There's two ways I use this. And the other thing is I use it in terms of counter-trend stuff. So if the trend in something is, in my view, weak and I'm looking for it to head lower, you can look for a reversal of a trend. So, here's LinkedIn. It's kind of flopping around in here. You notice this morning, right off the bat, the MACD stretches to the downside. A lot of times if I'm short something, I'll cover. I wasn't short LinkedIn coming in today on a MACD stretch. So before I get a cross on the 6 line, which is this orangey line here, and the 20 line is this blue line. But, watching, let's see, Twitter this morning. Twitter rallied, well, it actually never, I've been short this thing. I had decent position overnight, and it just continues to go lower. But notice how as it's breaking down, I actually covered some of my position on this breakdown right after the opening because it basically came down immediately, and you got a MACD stretch. So I use this MACD line. If it starts to stretch to the downside as it's coming down, a lot of times if I'm running a huge position, I'll cover part of it. And then it rallies back up, I might put it back out up in here. Which, did I do that? Yeah, I did actually, and now it's coming in. So we'll see what happens from here. But to me, it's a tool, and I get a sense of how it works with different stocks from using it and watching it and being able to internalize what I'm seeing. So I tend to be very visual. I think Dr. K is similar. And I see patterns in things when I look at stuff a lot, and I get a sense of how it's working. Some people want to hit me with questions about, like I was saying, do you use a simpler exponential? The entry point is, 3 cents difference. Like BFT, what does that matter? I'm just trying to get into a stock where it might be turning, get out of it where it might be turning, and if I'm close, that's good enough for me. I don't need to hit it exactly, and I also need a mechanism for telling me when I might be wrong and when to get the hell out of the way on the short side. So that's really what I use it for. And all of this chart stemmed from getting whacked on the short side in 2009 and also realizing that I can make a lot of money on the short side very quickly. The trick is keeping it. And so I wanted to always have a rationale for when I cover stocks, and I've refined how I cover short positions quite a bit. As I was talking about on the webinar the other day that we did for, what was that, Dr. The E-Trading Expo or something, which is a division of Money Show.
Yeah, Trading Expo.
Yeah, if you look at this was a stock I campaigned very well in March on the short side. I got most of this move. But what I did here is as it broke down, I actually shorted it on the breakdown here because you get this wedging, no volume move to highs, and it breaks down and it blows down to the downside. It comes down just below the 50-day. You could cover it there and then it rallies, but I was just getting short this thing, and it rallies here, and I got very short. And then it breaks down, and it undercuts this low here and comes down on top of this base. And then from there it rallies back into resistance up here at around 34. I shorted it again on this day, and then you blow to the downside. You undercut these lows. You can cover there. It rallies back into resistance at the 30 area. Short it again. Boom, it breaks down, undercuts this low and also this low over here. Cover it again. It runs up. Short it again. And by that time it's pretty well played out. But I use undercuts of prior support as areas to short, also undercuts of moving averages, because a lot of times what happens is everybody sees a stock breaking a moving average and they all jump on it on the short side. They shake out all the sellers, all the weenies run out of the stock, and it turns and rallies. And so it's more a fake out area. So downside breakouts don't work so well. You want to be covering into the undercut and rally type situations. And so I use this in combination with the 620 chart. Someday maybe I'll write a book on it, but probably by that time, Dr. K will probably stop working. Do you use limit or market orders for shorting stocks? Why does that matter? I generally use market orders unless I accidentally hit the limit order into something that's rallying. But why? That doesn't matter. If you want to be short the stock, get short the stock. If you need to use a limit order, then if you think it's rallying and a rally up into an area of resistance, and you might put a limit order and then go play golf for a little while and see if they hit you on the rally. But no, and again, why does that really matter whether I use limit or market orders? I'm just trying to understand, what the value of using one or the other is. The only thing that's relevant is if the stupid stock goes lower from where you short it, whether you use a market order or a limit order, a stop buy, stop start order, whatever the hell there is. I wouldn't make it too complicated.
Yeah, if you see the open opportunity, you got to take it. You got, don't mess around with limit orders. Just go ahead and,
Yeah,
take your position.
a lot of times you sit there with limit orders. You don't make any any money on the thing because you don't ever get your position. And I always love the guy who sees a stock trading at say 42.75 and the stock is moving, but nope, he's going to put a limit order at 42.60 because he's going to get some kind of bargain. It's a stupid retail mentality where we think that a shirt that's on sale is a great buy, and a stock the same way. It's not the case at all, really. You want to buy them and you want to get on board. And if you got to worry about dimes or nickels or even quarters, then you try something else. Somebody says, I'm amazed at how much you can learn from YouTube videos. Is that true? Dr. K, is that true? Only the
He's
YouTube...
saying how much he can learn from YouTube videos in what context?
I have no idea.
It's kind of an open-ended statement.
Don't worry, that question's coming from the infamous Scott, so he loves to just come up with random stuff. Anyways, let's see, what else is going on? Do I have any brilliant ideas to lay on you? I thought it was interesting that Proto Labs, which, here's another breakout on a cup with handle attempt here. See that? Cup with handle tries to break out, fails. I don't understand how the guys at IBD can actually write with a straight face. I wonder if they do when they talk about how this stock broke out and this is positive for the market. Kaboom, and maybe, for all you know, just being a double bottom pod, for all you know. I can't borrow the stock. So FCTY is another one of these weird stocks. There you go. That's maybe a pod. That's what it's looking at. Reversal. I tried to short it this morning. Can't borrow it. I may have to become an options convert. Somebody says learning things from YouTube videos relative to just searching Google for information. I actually find Google really useful, YouTube rather, which is Google, I guess. It is, right, Doctor? Yeah, it is.
Yeah.
But I find the videos, if I want to learn a piece, a guitar piece, there's actually guys who have lessons on video, and you can go on YouTube and you pretty much learn anything you want. I mean, back when I started learning guitar, everything you kind of had to figure out yourself, or if you could read music, which I never have been able to, you could have. But now you go on YouTube and you can learn all this great stuff. And so, yeah, I mean, so you're right, Scott. You can learn a lot of stuff. There's also a bunch of crap on there. So you could go for
use them both. I mean, if you start with Google, it will show you YouTube videos that are relevant to your keywords.
Yeah.
So that's generally my starting place is Google.
All right. Any brilliant questions about the market? Let's see. CRM. I'm just going to go through some of the stuff I've been shorting. You got to be opportunistic. I look at this. This thing looks like it's going to run through the 200-day, come in and hit it short. It breaks down for 2 days. Now you're kind of bouncing around the lows. They come out with earnings, I think, within the next month. I don't know if it's the end of the month or beginning of September. But this almost looks like, head and shoulders type setup, and maybe it's going to head lower. Maybe it doesn't break until earnings. But I've noticed whenever it rallies, you can short it, and you can make a couple of bucks. Some other ones here. Looking at Alexion right now is potentially shortable. If you look at this thing, this is a cup with handle. Tried to break out here. It failed. So now you're below the 50-day. I'm watching rallies up into the 50-day. This is a little trickier because even though it trades 1.2 million a day, it's somewhat of a thin stock. You notice how you find support at the 155 level, so rallies off of there, looking for it to eventually break through there. Look at also Biogen. For all you know, this is a pod type formation. See the big cup with handle on the weekly chart here. Tries to break out and it fails. There's a viable gap up and it failed there. And this is a beauty, I think, of viable gap-ups in the sense that when it breaks out here, you use that as your stop. You're out here rather than being some moron waiting for it to go down 7 to 8%. which people at IBD will tell you is based on their studies of the market, which, yeah, studying 5 stocks. Let's see, XRS keeps going higher, so, I don't know what to tell you. GBX and TRN look shortable now. Not really. I mean, they're starting to break down, so you might want to look at that. Not on GBX. TRN, now that is a failure because it's violated the 50-day. So I'd probably be watching for. Let's look at this on a weekly. I don't know if you call this a late stage base, maybe so, but it's failing now. Notice how it generally tends to hold the 50-day moving average, so it's changed character here. So what you want to look at are rallies up in the 43.21 level. What I find interesting about these particular names, GBX, TRN, I think Wabtec was another one in the group. Here's a breakout, cup with handle breakout. This is all over IBD on this day. New bull market, everybody get long, nice breakout. Slam, it's done. This is probably a short too. The only problem is it trades 483,000 shares a day, so it's not really my cup of tea. See, Amazon's starting to give it up. Let's see. Look at Twitter floundering around. Amazon's starting to roll over, but not really. But I'll bet that it closes lower than here by the bell. We'll see. Dr. K, please repeat website Redite. Is what you're talking about, right, Dr. K?
REDDIT.com.
Yeah. Reddit. I'm sorry. Green Mountain continuing to move lower. See that? Just kind of trucking lower. When you look at something like this, now this is let's see if this is. It sells at 29 times forward estimates, but next quarter, this most recent quarter, they had 21% earnings growth on a 6% sales increase. So you got over 1,000 funds own 78 million shares of the stock, has a float of 148 million. I think it's pretty well saturated. So I'm looking for this to head quite a bit lower from here, maybe down to the 200-day eventually, but you might run into some, maybe if it gets below 111 on this low here, which would be in here, maybe that's the initial undercut where it'll try and break down from there and rally. Remember, these late-stage failed bases, they tend to work such that they break down through the 50-day, you have a nice move, but then you do undercut something, or sometimes you go all the way to the 200-day. I think that mostly depends on what the market's doing. But they'll undercut a low, say here, and then try to rally back up again into the 50-day, or they'll completely break down and then try to rally from there. So you kind of have to play them in real time and see where things are going. LinkedIn starting to roll. I tend to think, I see that's a pretty good signal right there. I tend to think the stock is short on this rally. I think it's a big right shoulder rally. So that's my theory. And so far, it's inconclusive, but the way I'm going to know for sure is by a breakdown back down through the 200-day for sure. But I think that you're running into this sort of wedging rally and shorting it up into that as it moves up might be the way to do it. MNST is having a gap up today. That's probably a shortable gap. Yeah, because it's coming off the lows of the pattern, and they use these. If stocks have been under distribution, it's generally the case that if you get a kind of a sloppy gap up in the pattern, a lot of times that's just shortable. And so you can come after them on that basis. Any other exciting questions? Yelp coming down some more. There it is. Kind of blow it up for you. Resistance at the 10-day. It was shortable yesterday. P. Pandora Media. P is for pounded. Rallies up. You have rumors running around, and I think that these just get put out there to rally the stock so people can sell it. I'm watching Trip is another one. That's another one I just shorted a little while ago. Right up around 95. I'll see the break here. You actually could have hit it a little sooner. But like I said, I'm not using this as if it like some formula, and I'm going to hit it right at some price. I know a lot of you want to get hung up on that kind of garbage, but it just kind of gets you in the ballpark. And when you look at Tripp, say, on the rally, similar to Pandora actually, you see how it fails here, and you basically have some resistance in this low area here, like 95, 96. So you get a rally up yesterday. Now to me it looks like it wants to break down through the 200-day. But this was a nice short right here on this particular day as it rallied up into this area. You can see there's overhead resistance here around 101, 102, and then it rolls over and breaks down pretty hard. If we look at P, here's the move into earnings and the gaps down on earnings. My thing is, if they are going to get bought out, whoever wants to buy them out would probably do themselves a big favor by waiting for the stock to go lower, because I think it's probably headed lower unless somebody actually does come and buy them out. But there's some talk of AT&T buying them. I don't really understand why AT&T would want to buy them. Let's keep an eye on Illumina. Still watching it. Still rallying. Still rallying. Let it rally. Just let it do what it's going to do, because it's going to push up, and then at some point it's going to give way. So right now my reference points on this, you see you're getting into, what would I say this is? Let's say 167. So you're getting close, 167, 168. And if you short it in there, that area, 168, then you're about 1% away from the 50-day. So it could get all the way up to the 50-day. That is definitely a possibility. But I think this is just a late-stage failed base, and it is a short sale situation based on that. So, but you play them, be fluid here, and let the stock tell you what it's doing. For example, I was short a tiny position yesterday, coming into the day, based on the rally into the 50-day on Friday. No, not on Friday. What am I saying? On Wednesday. And it starts to gap above the 50-day, and the volume's pretty decent. I just cover, go away, and wait and see what happens. Don't really need to mess around with it. So, market's still grinding higher. It's another one I'm keeping an eye on. It's in a base, but not really going anywhere. Came out with earnings, nothing happened there. VMware is another one trying to come out. You see this big, it's really in a big head and shoulders type formation. Never really had a big run. But a lot of times stocks, after a top and going nowhere for a period of time, they set up in a head and shoulders formation and then break. Notice how it's stalling up in here. So I tend to think that this turkey is going to be shortable at some point. I've been able to, like I shorted this and hit it, hit the 200-day and bounce back up, and then it breaks out like this. So this looks like you're stalling in here, and this could be shortable. So keep an eye on this one, either for a breakdown or maybe if you had a little low volume, weak bounce. I mean, you're kind of getting that right now, back up over 100, then it might be shortable. But also a good example, I think, of a stock that you have to stay with these things. You might get stopped out very quickly, and I'm willing to take a lot of little losses to finally catch a nice break to the downside, and that's basically how I work them. Comcast short into the 50-day. Let's see. This stock, big cup with handle failing here. Yeah, that's another example of this sort of thing, and it has been more or less a leading stock. It has moved higher. The only thing you got to watch out for on these is someone says you're going to buy it out, and they start running. But you notice another thing, you're seeing a lot of this sort of action, these base failures. And I think that it's basically telling you what's going on underneath the surface of the market. So I think at best you have to be cautious on the long side. And the opportunities on the short side required, I think, that you wait for the stock to set up properly and try to come in at a low-risk entry point and just operate on that basis. So anyways, I need to get back to trading as we rally higher. I see some things coming into zones where I want to short them if I'm not already short some of these things. So I think we're pretty much done. If there's any last questions, we'll handle those, and then we're going to sign off. Nothing? Okay, well, thanks for showing up, everybody. We'll catch you guys next time. Take care.
So long, everyone.